Maybe a round of applause for all the startups that are here. And fantastic presentations, because I must say, it just makes me wonder how many TED Talks you've all watched today. I know I have. So today, I'm supposed to be talking to you about InsureTech. InsureTech, there's Fintech, there's RegTech, which I honestly only learned about earlier this year, RegTech. And it feels like every industry now is slapping the word tech to it just to sound rude, cool, or relevant. And recently was on Sheikh Zayed Road, and I saw water tech. I mean, water tech. I mean, what's next? Pandora tech? I don't know. I don't know what's next. Underwear tech, maybe? You know. And the day has come. I would really like to attend a conference about this. Maybe Fintech Hive can host this for us. Although it's self-explanatory. It's called, by the way, it's called Wave Tech, and you know, I guess whoever wants to try it, I have a couple of pairs in the back. They work really well. Okay, fun's over. InsureTech. Basically, InsureTech is a place where startups have found home. They're looking at the old and clunky insurance business and combining it with today's modern technologies, hopefully and ultimately providing better value for the customer and also making a lot of money on the way. And you might ask, why the insurance business? I mean, no one cares about the insurance business, right? But that's exactly why people should look at it. I mean, while everybody is worried about autonomous cars, the sexy stuff, and underwear and all that stuff, we need to start looking at those hidden gems. Why? Because first of all, it's a $5 trillion industry worldwide, a massive contributor to the world's economy. Its players, the largest players are 50, or at least the largest 50 players have an average age of 95 years old. They're old, they're clunky, no disrespect, but you're old, all right? So, and it's very hard in such an environment to innovate, if you wish, and change that culture of innovation. Thirdly, it's nothing much has changed in the insurance business. It's still sold the same way. Brokers, agents, sells a policy, and it's service, and file a claim is the same. If you think of the banking industry, it's changed. Today, I don't choose my bank based on how many branches it has, but what facilities it gives me on my phone. How good is that app? That's how I would select it today. So fundamentally, it's changed, but in insurance, nothing much has changed. And thirdly, it's unloved. Like I said, no one cares about it. I might have insurance. I have to have insurance. I might file a claim. I might not file a claim. And just to put my point home, Disney and Pixar made a movie quite some time ago. Does anybody know which movie this is? Mr. Insurance? Mr. Incredible. Mr. Incredible, for those of you, let me just give you a quick story about Mr. Incredible. Mr. Incredible, along with his fellow superheroes, did a mistake, and long story short, the government wanted to suppress their identities, and they should blend in into the normal citizens and hide their superpowers. So do you know where the government put him in the most unglamorous job of all?
Insurance.
Insurance. Right? That's what Disney and Pixar are telling my kids about my profession, that it's extremely boring. All right? So my point is, it's a massive industry, old players, untouched innovation, no one's really looking at it. I smell disruption. And if this doesn't make it worse, it's official. Amazon is entering the insurance business. A technology company entering our business. 2 words for you. Uh-oh. Or maybe 1 word. Uh-oh. Or maybe make it more dramatic. Winter is coming. For those Game of Thrones fans, winter here means disruption, by the way, but just wanted to dramatize. Let's talk a bit about InsureTech. About $10 billion has been invested so far since 2014. And you see here on the y-axis, P&C, property and casualty, insurance, health insurance, life insurance, all the disciplines. And on the bottom, you have the insurance value chain. And you can see most of the investments so far has gone into the distribution section, which is where you think about it, it's all those aggregators who insure, what's that, insurancemarket.ie, or I think we have Superma. That's where most of the investments are going. I would like to see it actually go, most of the investments go into pricing, into claims. I think that there's a lot of value we can add there to our customers, and I think customers would really, really appreciate it. Another thing I'd like to highlight, those are the top InsureTechs in the US. And one thing to note here, you know how insurance companies do everything? They do health insurance, life insurance, they do everything, and we're proud of it. But InsureTechs are not doing that. They're focusing on one discipline at a time. So you have Lemonade focusing on home insurance. You have Oscar focusing on health. You have Troll focusing on personal items. I think that's very important to note. Maybe we need to focus, us as insurers, we need to focus more on something that we're really good at, and that's what they're doing. Another thing to note is, so these are the technologies that are being used in today's, or adopted into insurance. You can see that mostly startups are focusing on big data, obviously, because insurance is largely a data-driven industry. We need historical data to be able to price better and to underwrite appropriately. But obviously, they've been using IoTs, gamification, and we actually have one player here that is an InsureTech focusing, that we're working very closely with, on blockchain. How did you know I was going to say blockchain? All right. Okay, so that's about InsureTechs, and my next, I guess, advice would be for the existing insurance companies. And I love this quote: Uber yourself before you get Kodacked. I mean, it just makes so much sense. And I hate to use this argument, but the whole story of Uber is the largest taxi company in the world, but it doesn't own any vehicles. YouTube is the largest video company in the world, but doesn't do any content. Who is going to be the largest insurer in the world, but doesn't do any underwriting, to take on any risk? I think that's a very good question. And to be able to Uberize ourselves, because we really lag in innovation, I think we need to do it in 2 parts. First, let's just get the basics right. All right, as insurers, we need to get the basics right. And by that, I mean, we need to partner up maybe with InsureTech or invest in them and just let them look at your customer experience. How does my customer buy? How does my customer file a claim? How do we make it easier? How do we make that process easier and simpler for the customer? Secondly, make it simple. I mean, we have one product that has 13 different versions. Why? Gold, silver, platinum, and make it clear cut, straight to the point. Thirdly, self-service options. Banks have done this already. I don't want to talk to an agent. I don't want to speak to anyone. I want to do all the research online and buy online and service online without talking to anyone. This is something that we don't have today. We do have a few players, but unfortunately it's not the standard. So that's what I'm saying. We need to innovate here and get the basics right, and then maybe become more data-driven. And that's where the more advanced stuff comes in. IoT, if you think about car insurance, for example, 2 people have the same car or bought the same car, same specs, same everything. They're charged the same thing. But what if one is a horrible driver or one is a I'd like to incentivize the safer driver. I mean, if you come to me as an insurer and say, listen, you're not going to pay 10K, you're going to pay 5K if you drive safe. I'll take that deal. Put a chip in my car, monitor whatever you want, all my driving. It's not them monitoring, it's the systems that are monitoring, and in the end they give you a price that's lower than your original price. Why not? So not only that, there's also preventive and so predictive analytics. We're able, by this example that I gave you, we're able to predict who is the risky customer from who is likely to get into a car accident and who isn't. And lastly, preventative. By putting that chip in the car, you're altering his behavior. And ultimately, not only as an insurer are we taking the risk, but we're also preventing that risk or reducing that risk. I mean, I think at the end of the day, it's all about saving lives. If you can save a few more lives a year, accidents, just by putting chips in cars and monitoring the behavior, I think that's a good deal. So that's it. Quick benefits. I think number one benefit of InsureTech is enhanced revenues. You have now access to infinite number of customers. You no longer, the bottleneck is no longer how many agents you have or how many brokers you have. It's endless. If you get the digital piece right, it's endless, the possibilities. Second, customer engagement. I'm not going to only engage with my customer when they buy it, when they buy my product, or when they file a claim. I want to engage in between. So for example, I want to tell my customer, hey, you drove yesterday really nicely. Here's an incentive. Oh, be careful. Yesterday it was raining. Don't drive on benzines. We need like engagement. That creates a lot of loyalty in our world. And then thirdly, that's what we all are looking for at the end. Operational efficiency. You're talking about more revenues and maintaining your costs and providing that, getting into exponential growth. This is in the end what we all want to get to. So, for the people at Disney and Pixar who still think that insurance is boring and mundane, I have news for them. And at the end of the day, you will soon see superheroes that emerge in our own industry. They could be in this room, hiding their identities and hiding their superpowers, but eventually one of them, or all of them, I don't know, will be crowned Mr. or Mrs. InsureTech. Thank you very much.